Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. This segment is presented by Charles Schwab. I'm your host, Jill Malandrino, and joining me on the desk at the Nasdaq Market site, we have Brian, Joyce, and Maddie Radner on the Nasdaq Market Intelligence Desk, as well as Timur, Turlov, CEO of Freedom Holding Corp. We're here to discuss global economic outlook and providing access to the U.S. markets for institutional investors. It is great to have all of you with us. Welcome to Trade Talks. Timur, great to have you on set with us. Tell us about Freedom Holding Corp and the integration of chess in the market. Such an interesting story.
I think chess is a very valuable club, so a lot of our counterparts, bankers, customers love chess, and that's why we actually started to pay even more attention for chess development. So I do that in my home country, in Kazakhstan, and I'm head of Kazakhstan Chess Federation. We also develop initiatives, International School Chess Federation initiative, and just hosted a very big and very beautiful tournament in Episcopal High School in Washington, D.C. It's still going, this tournament. So we see so much similarities, and I think the financial markets and investments requires the same strategic thinking like chess, and it's intellectual game which resonate to financiers very, very well.
So when you think about applying some of the skill sets that you have from chess as you look at the global economy and the macro picture, what are some of the signals that you're focusing on?
Usually chess is a very great way how to better understand how some circumstances can influence quality of decisions. Because if you're tired, if you're stressed, if you're trying to be in a shortage of something, you usually starting to make much worse decisions. And that's also happens with economy now, because everything accelerates with technology. That brings additional stress to society, to politicians, to even to institutes. And to keep calm now and be rational, I think now it's much more difficult than ever again.
Yeah. And Brian, when you have your technical analysis work, that helps to remove some of the emotion because you're looking strictly at levels and numbers and other indicators. So if we look at the S&P 500 as an example, what are the numbers telling you directly? Not fundamental, not what we think is going to happen, but what has the market told you?
You know, it's been a phenomenal run over the last 3.5 months. It started with a big surge in breadth where there's a lot of companies contributing to that advance off the April lows, and typically, historically, that bodes well for future performance. And so the S&P rebounded 33% to last week's high, the Nasdaq 100 43%, the Bloomberg, the Magnificent 7 index was up 53%, but we've had a lot of participation, not just with the technology and communication. Utilities did well, many of the large financials did well, industrials did well, so we're seeing very strong breadth and have been over the last 3 months. It's been waning a little bit in July, but certainly, you know, if you can have an objective point of view when you're looking at the markets, when applying the technicals, the technical analysis, it's not always easy to do when you're in the heart of the Liberation Day era and all of these concerns, and it's hard to always, you know, filter out all the noise, but if you can do it, it usually bodes well.
So if we take a look at the S&P 500 from a technical perspective overall, and then also the equal weight, what can you discern from there? Have we topped out? Is seasonality going to play a part here?
I think near term you could say we have topped out. If we look at the equal weight index, we could see last week's high almost to the penny, you know, stalled right at the prior high from December of 2024. The weighted index, it did get about 4.5 to 5% above that prior high. And we can see on Thursday this bearish engulfing candlestick. This is a daily period chart. We gapped up higher on the open. We finished down about 1% from that high. And then with Friday's disappointing employment data, we had a gap down lower. So that gap to the downside is potentially resistance level. This white line here is 63.28. I would look to see in the very near term, it's a very, I would say, minor resistance level, but it wouldn't surprise me given the strong run-up that we've had that we would see a bigger, deeper period, a more prolonged, maybe 1 or 2 months period of corrective price action. We could see here in this lower panel, this is the percentage of the members trading above its 20-day moving average. And in April and May, it was up around 89%. In June and July, it was falling to below 50%. So that is what happened as price was making those new highs. So that divergence was saying, hey, maybe the continued momentum, it needs some time to correct.
Yeah, well, and Maddie, earnings certainly help contribute to this momentum as well, especially in the names where there was concentration.
Yep, nearly 75% of S&P companies have now reported earnings. So, as you think about chess and strategy, and investors are currently digesting these earnings prints and trying to strategize, where to position their portfolios now. It's looking like that is still going to be in the large cap tech names for now. So when we look at the earnings growth expected for the S&P 500, right now the Mag 7 earnings growth is still looking to be about 14% year over year. Compared to the remaining 493 companies, they're only looking to grow about 3%. So it's really not until 2026 where we'll see that gap start to narrow. So right now, investors are still really scrutinizing the large cap tech earnings.
Yeah, and from an international investor perspective, how do you view the U.S. markets?
I think it's still most attractive markets in the world, and we see that actually with some period of time, we see some development of markets in Central Asia, in Europe. The popularity of trading, liquidity in markets, I think generally growing. Even if we see some less activity on the institutional side, the retail activity is growing almost everywhere. But if we'll take a look at Central Asian markets, so we don't have enough depth on our market, and we're still very interested in U.S. names. And performance of U.S. market is still, I think, one of the best in the world. And I think it's very great combo when you can invest brands which you definitely know wherever you live, and when you can get investments in a stable currency and still get a very good performance of that investments. That's already created a very great culture. So I think in Kazakhstan, more investors actually exposed to the US markets rather than to local markets at this moment.
Well, plus they have the ability to access the markets through a platform such as yours. I mean, the accessibility wasn't there.
Yes, digital ecosystems generally grow, and we see how they started to transform market and how that helps to grow efficiency, because if online trading became efficient enough, I think many years ago, almost everywhere, as well as in the United States and Kazakhstan. But now we see how investments started to be incorporated into digital banks, into insurance products. So it's all the infrastructure is much more affordable. It's much easier to understand. So they may the confidence level is much higher because they no need to deal with unknown broker dealers. So they pay attention to their main bankers, to the brand names which they use for everyday payments, and they're starting to use the same app to invest, which happens in Kazakhstan, which happens in Europe, which I think is a global trend.
Which is interesting because with emerging markets, they have essentially leapfrogged because they don't have legacy institutions. So this access is with the latest infrastructure, and it's not as if you have to integrate, but it's available, and economies are being grown on the ability that cross-border payments have, alternative forms of capital formation, and so forth. So many developing markets have leapfrogged.
That's true, and we see that because of our, for example, population in Kazakhstan, where we still have a lot of concentration of our business, is very young, and the government also is very tech optimistic. It's very easy to adopt new regulation of data privacy, for example. Right. And we created a lot of great fintech products like digital mortgage. So we do mortgage in Kazakhstan in a single day, and that is standard for a market. And with the cost of origination of mortgage in the United States a bit above $10,000, in Kazakhstan that's $200. So it's much less, much faster, much more efficient. And finally, the bank who do the service will save a lot of money on operations, and we may live with the same profit margin like in the United States, even in more difficult and very high yield environment in general. But because of quite liberal approach to technology, we may leapfrog, and also that's because we're building markets from scratch. We no need to fight and overcome some different customers' interfaces because they stuck and they loyal to some products and they expect products to be the same. And if you never dealt with the products, it's much easier to start from scratch and teach customers your interfaces.
That's a good point that you bring up. And a lot of that technology, Brian, is driven by the Mag 7. Anything we can see in the charts in terms of their performance, I mean, because of the concentration in the indexes, as they go, so do the markets at times.
Yeah, like I noted before, that it's up 53% from the April low, so just a phenomenal run. It did have, as you can see, this is a weekly period chart. We did have a breakout to new highs last week. It pulled back. Some people call it a false breakout. It's very, I don't know if I'd go that far, but because that implies that it's now going to reverse sharply lower. I don't necessarily think that's the case. We could certainly see a deeper correction from here, but it still looks certainly constructive. In my opinion, it's holding up right at those prior highs.
I mean, we think about buying the dip, it's intra-session now. It's not even like there's a trend where a month or two, a quarter and so forth. I mean, it's happening between the open and the traditional close.
Yeah, I mean, and as you noted, we did have, we're entering August, September. From a seasonal perspective, the two of the worst performing months. August has the highest volatility of any of the months over the last 20 years. So that's, a potential headwind. So we could certainly see, a more prolonged pullback. I mean, it's only been a couple of days.
Yeah.
So we may, we could continue higher from here. But I wouldn't surprise me if we do see a period of healthy consolidation, either sideways in time or maybe short-term deeper in price. But I think going into the end of the year, I think there's a reason for optimism. We had a Fed meeting last week. I think going forward, I think because of the softer employment data, markets are now anticipating with high confidence, 90%, that at the next meeting in September, that we could see another rate cut, maybe 2 by the end of the year. I think we're pricing just over 2 rate cuts by the end of the year.
The broadening out would be positive, though, because there are other opportunities in the market outside of the Mag 7.
Yeah, I think that would help maybe see an investor shift into small and mid-cap names. Right now, that space has, sees valuations really attractive. They're going to benefit from the declining interest rates that we will see, at least heading into 2026. They're seeing reshoring of assets to the U.S. They're seeing an increase of M&A activity, and they're benefiting from the deregulatory environment that we're in. So, when we talk about positioning, we could start to see some attractive spaces in the small and mid-cap area.
I think another positive area, too, is the IPO pipeline. I mean, the calendar that I could say on my outlook is filling up, and it's diversified companies as well. It's not just one particular sector.
Yeah, we're really starting to see strong signs of recovery and momentum. We're starting to see that domino effect. So companies that do decide to move forward are really performing well post-listing, and that's what peers want to see. They want to see companies go out, have a really successful IPO, and be up from their offer price 30 to 60 to 90 days later. So we are starting to see that. Morgan Stanley actually noted that the next generation of IPOs will likely come from companies that are bigger, that are more established, and that are sponsor-backed. And we've actually seen 6 companies who have each raised over $1 billion in proceeds so far this year. So we're seeing a flood of companies from technology and AI, fintech, e-commerce, and healthcare really file, and they're expected to raise $1 billion plus in proceeds.
Well, I mean, Freedom Holding Corp is certainly one of those stories where it has sustained, its price momentum.
Oh, it looks like now, in terms of market condition, we really see more or less the same which we've seen before 2021, maybe first time after, and it was. We live in a very, very shaky time, and every year we see something very unexpected. We see some huge stress for market, but I'm still sure that if we will, and that's what you're talking about. So that the most successful is still e-commerce, is still AI, is still all these tech companies. It's very logical because looks like this company will continue to create most value and transform industries, and everything will become technology, and everything will become AI. So we're not going to expect some special AI companies. So AI will be everywhere, and already is trying to be everywhere. But some ecosystems who already own customers' attention, they definitely have an advantage now to implement new solutions and monetize this solution and monetize big data coming from this. And in this case, it looks more and more reasonable to investors to continue to concentrate. And we live in a world when winner take it all. And we see the same in Central Asia, we see the same in Kazakhstan. We see how, for example, our market share is actively growing in our country, how our market share is continuing to grow in Europe. And if you have a team with the right culture and already robust technology, so that's create a momentum which most of competitors doesn't have.
Appreciate everyone's insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.